Hi everyone, I'm Ken from CryptoTradingKS. If you're new, welcome, and welcome back KS family. Let's run the numbers. Bitcoin currently down 4.47% to 34,800. Ethereum down 7.01% to 2374. From my 30 plus years in financial markets, I explain the smart money institutional mindset to assist you to be more of a financial blessing to yourself and those you love, gaining real wealth in the process. If you would like daily updates on price movements in the crypto market, 7 days a week, 365 days a year, please subscribe to YouTube. If you're going through a life pullback, please know that our community's love and healing thoughts are with you. You're not alone. There's always hope, and the sun will come out again. Rule 774, master yourself to master the market. KS zone analysis are the 4 stages that every single investor and trader progresses through to become consistently profitable and attain real wealth. If you're in zone 1 or zone 2, the panic or the blame zone, understand that this is just a normal progression through these different zones to consistent profitability. Zone 1 and Zone 2 are all about certainty. People promise, a lot of influencers promise, that they're going to be spectacular returns from the crypto market. And of course there can be, but the problem is you need knowledge and you need to know what to do. When people go into the crypto market to start with, they feel, because they've been told by influencers, it's a sure thing. You don't have to lose anything. You'll make lots and lots of profit. You don't really need to know anything. You can just get a couple of indicators, and those indicators will save you. We as professionals know that is not true. The crypto market is not a casino, and we know the casinos, the house always wins. A lot of people are sold on the concept of crypto, that they don't need to learn anything. They don't need to know anything. They can go and place a bet on any particular crypto and it's just going to come back a 10x, a 1000x. They'll turn $1 into $100 million. And then they can just retire and live the good life. Unfortunately, this is simply not the truth. This is why a lot of people enter zone 2 and get really, really angry. And no doubt, that is a natural reaction. And all investors and traders progress through these particular zones. When people get to zone 3, it's all about probability and rules and forgiveness. Forgiveness for the fact that you just didn't know the rules of the game. When you know the rules of the game, money does follow. And there are a lot of rules. Zone 1 and Zone 2, people suffer what I call the light switch effect. They tend to go all in or all out at any particular time. They generally go all in when the market is green and go all out when the market is red. This is exactly the opposite kind of behavior that institutional and smart money investors do. Probabilistic fearlessness is the basis of Zone 3 and Zone 4 behavior, where we lean in or scale into positions at various lower levels of support. Professionals look at red markets knowing that they will bounce back, sharp angles reverse. It's a rule inside crypto. And they make volatility their best friend. Instead of being terrified by volatility, professionals look forward to it. But that takes a while to get the right mindset and the right skills. A key Zone 3 and Zone 4 rule is Rule 245. You either learn or you win. There is no failure in this world. It's either a learning experience or you were victorious, but there's no failure. It's really important to understand that. If you're learning, you're fine. So what actually happens inside the crypto market? What causes crypto to go up or down? It's Rule 45. No alt can escape Bitcoin's gravity. If Bitcoin is going down, it will drag the entire crypto market down with it. If Bitcoin is going up, it will pull the entire crypto market up with it. Understanding Rule 45 is the first stage of entering Zone 3. When we look at Bitcoin's current price action, we saw that a couple of days ago it was doing really quite well. It was just nearly above this support level and turning it into support, but below this resistance. That was rejected and we saw a big sell-off. Now we are definitely in a black swan moment. It's a very sad thing, but black swans always happen. They're happening all the time, and if you know how to manage them, they are actually the single most profitable time to actually invest and especially to trade. What basically happens, zone 1 and zone 2 are selling when the price goes down. They tend to sell the red and buy the green, and this is because they're being told that returns are certain. So therefore, if things are going red, it's certain that they'll keep on going red. What professionals do is they understand a really important mathematical law, and that is the law of how percentages change both up and down. What we see here, if we look back to the COVID sell-off, Bitcoin came down 63.98% from this particular peak. That happened over 29 days. Over the next 80 days, we just about regained that previous level, just about. We had a 64% decrease. What does that mean? We're expecting a 64% increase. Actually, we got 174.45. This is the reason that we buy these and we hold these. We're waiting for the repair. What a black swan does, it's an anomalous price behavior. That basically means that there's been some kind of shock to the system, to the financial system, and we know always sharp angles reverse. What happens is price cannot stay suppressed for too long. That's simply because it becomes too profitable for people not to participate. So we see a particular percentage decrease followed by a percentage increase. And this is why professionals always lean in to when price is going down. In episode 407, I gave some mechanics of why professionals do this, and all the wealthiest people in the world do this. This is the way to actually make money. They are unprecedented opportunities. But smart money tells retail investors never to buy the falling knife. Always pick the bottom and sell at the top. They say so many rules, and they're wrong rules. And the problem is, with that, so many people say, I know what to do. I buy the bottom, I sell the top. It's impossible to do so. It literally takes decades to unlearn this really hidden, very bad programming that people enter the markets with. In episode 407, I actually went through the mechanics of what crypto winter looks like. We have some really good increases in price. Definitely we have some sell-offs, but those sell-offs are pretty much part and parcel of what crypto does anyway. When we get into these winters, into these bear market kind of situations, the thing that you want to do is you want to trade. It becomes a trader's market. When people hold, generally, they can get very nasty returns because price is just coming down. But when people are trading, what we actually see, for example, here was a 43% decrease followed by a 54% increase, a 46% decrease followed by a 41% increase, down 54, up 98. You get the idea. We're definitely in the correction mode. A black swan has hit, and what we need to do is to just be aware of how those percentages play out. Retail investors will be getting really spooked, and they'll be getting angry and very stressed out. If you're feeling this way, please look at Rule 219. Be kind to yourself. It's not your fault. What actually happens in the crypto space, it is incredibly volatile. It's the most volatile market on the planet. Don't be angry with yourself. And if your partner's listening to this, of course, don't be angry with your partner either. The future is always uncertain. You can't ever know the top and you can't ever know the bottom. You can't know how world events will trigger various things. Being kind to yourself is one of the most important things. If you don't and you can't muster that courage to be kind to yourself, you cannot enter Zone 3. Zone 3 is all about probabilistic fearlessness. Being kind allows you to forgive yourself. It's not about forgiving other people. They don't matter. It's about forgiving yourself because you just simply didn't know the rules. You just need to learn the rules. What learning the rules looks like is you go into study, and that study is a little bit onerous. It's not easy, but of course, crypto technical analysis is one of the highest paid professions in the world. It's not going to be handed to you. And when people think that they can have massive amounts of money, massive amounts of success without work, that's destined for failure. There is no chance that people can walk into holding large amounts of money without earning the right to have that money. And then we can think that it's all about how you think, the rules that you hold, having patience to wait. These are things that are not common. And it takes a lot of understanding to get into Zone 3 and especially to Zone 4. What you can think of, Zone 1 and Zone 2, how to lose money. Zone 3, how to make money. Zone 4, how to have a meaningful life. There's plenty of people that can make money and then lose money. Make money, lose money, make money, lose money. And some particular instances of people making a lot of money but not finding any meaning in life, and that ends very badly for them. The next thing that we always think about, we must stack probabilities. We need to look through the market. We need to look through current events. And then we're like this person, like a professional skier. It doesn't matter, crypto winter, crypto summer, we don't care. We can make money in any condition. It's also about making in advance probabilistic choices, knowing what you will actually do and keeping your word, having the integrity to back up your particular decision. If it goes down, what will you do? If it goes up, what will you do? If it goes sideways, what will you do? These are not easy things to follow through on, but if you're doing it in advance, it's much, much easier. Crypto technical analysis is also about going after real wealth, putting money in the context of what it is. It's simply a form of energy. Good people with money do good things. Bad people with money do bad things. It's as simple as that. And if you think of all the goodness inside you and you cultivate it through a positive excellence life trend of contribution to others through integrity, decency, kindness, but also with strength, boundaries, courage and honor and fearlessness, you will attain inner and outer peace. And a lot of times we're after money because of course we need security as people, but we also need to feel happy about our lives. It's a very psychological journey to get into crypto, having the strength to deal with these particular downward spikes and then rewiring your brain to actually look forward to negative price momentum. That takes a bit of doing, but it is possible, and that's what we do inside our community every day. In episode 406, I went through that Russia is banning crypto, and also the Ukrainian issue with Russia. What we see is that could be actually the catalyst of what's happening inside markets at the moment, or a catalyst. Of course, there's also the Fed rate hikes. There's also Evergrande. Actually, there's no shortage of things realistically hitting the fan, so to speak, around the world. But this is just really normal. They say that a bull market climbs a wall of worry, and to understand this is to understand that things just move around. Professionals therefore stack probabilities. What do we see in the US market? The US market, fear is coming up. Why is that? Because price is coming down. What do we see? Oil is going up. This is actually not a bad sign. When we have major corrections, typically oil just plummets. It goes down very, very quickly. What do we see with bond prices? This is generally a flight to safety and money exiting the stock market. We can see bond prices have not been going up the wall, but please bear in mind it's across the weekend, so when the main markets open on Monday, we could see some quite significant action. Please prepare yourself for that. It's really important to be one step ahead, but don't panic. It's not a light switch moment. It's a time for cool deliberation. What will you do? And always think, what will you do if prices keep on going down? What will you do if they start to just go horizontal, go sideways? And what will you do if they rebound upwards? You need to think about what the probabilities are for those particular things. Our masterclass students, you will get my live chart in TM6. We can see bond yields have been going up. When bond prices come down, bond yields go up. This is quite good for crypto, but we've seen a divergence of late. We can also see gold has been rallying, probably on the news of Russia and Ukraine. What we also see is gold is not taking off parabolically. It's just basically making a wave of price action like back here. So let's keep our eye on that. We're not seeing a flight to safety with the US dollar. Generally, when we get crashes, the US dollar will tend to spike up. It hasn't been doing so. If anything, it is actually under resistance at the moment. That's why this particular correction has caught so many people off guard. And this is the nature of markets. When people look for certainty, they're definitely in zone 1 and zone 2. If you're thinking from a position of certainty, please pop out of that and think from a probabilistic stance. When you see bond prices not going up parabolically, this is a really good thing for the markets. That means that the markets are not seeing a risk-on event. Of course, we need to see what happens on Monday, but the idea is that bond prices are way below resistance. We can see the bond yields going up, and we can also see a corrective action, but there was a lot of overhead resistance at that 16,431 mark. Price couldn't get above it. Sometimes price needs to come down to consolidate, to push through resistance. This is natural price action as well. Please be aware of that. Masterclass students, you will get this in TM5. When we look at the Chinese property market, we can see that the property giants are actually improving in terms of their share price. They're not plummeting. What this means is the CCP is actually supporting these firms. Looking at the crypto fear and greed index, we can see we're in extreme fear. It's a really, really low rating at the moment. And that is actually the absolute best time for long-term investors to get in. It's at times like this you want to lean into the market. It's the absolute ideal time. When we look across, for example, the maximum time, these times were the single best times to ever be buying, but it's the last time any retail investor or trader would want to buy. Getting the psychology right is really, really important because of the volatility inherent in crypto. If your thinking is not correct, you'll actually get yourself out of potentially very, very profitable investments and trades. Rule 28, opportunities reset daily. Looking across our first day, we can see Bitcoin coming in to retest this support line. And we've seen a couple of our 10-5-10 levels hit. Ethereum, following Bitcoin's price action. Remember, no alt can escape Bitcoin's gravity. Bitcoin's gravity will push the entire crypto market down. And we can see that with Binance Coin as well. Solana, we see it as well. Cardano's putting in a nice bounce here. When you get these long tail rejections, they can be really, really good to buy down on. For example, this one here with XRP, that is what we lean into, and that is what retail runs from. If you like, think about professionals are like firefighters. They run into the burning building when everybody is running out of it. We can see DOT has come down. It's actually one of the 10-5-10 levels. There's another one below it. We can see Luna as well has had a sharp sell-off, and is activating some of these 10-5-10 levels as well. Doge has also been selling off, as has AVAX. SHIB is selling off, as is Matic. Litecoin is selling off under resistance. Uni is under resistance. We can see what is actually occurring here is as Bitcoin's gravity impacts all alts, they're being pulled down with Bitcoin, but to varying degrees. This volatility is inherent in the crypto market. When we see Bitcoin Cash, it's coming down. It's plummeting right along with Bitcoin. Have a look at Tron. This is really interesting. You might notice some particular levels here. When we come across to the actual price action, just about all of those levels have been filled, but they were quite substantially below current price action. This is the volatility that is inherent in the crypto market. If you make volatility your best friend, you're going to do really, really well. Decentraland, just broken support on its way down, but we can say that across the entire crypto market. But just beware, sharp angles reflect, they reverse. Axie Infinity, same thing. We'll look at Rose on a deeper level in a minute. We can see VET coming down. And this is quite interesting. Looking at Atom, at Cosmos, we saw that there was a little bit of trouble getting above this resistance line, but it was trying very, very hard. Now what has happened? These 10-5-10 levels that were so far away, for example 43 down to around 29, just understanding this is literally a license to print money. If you understand the volatility of crypto and you can work within it, and that takes a lot of new rules to do, you'll do really, really well. Okay, FTT, we've seen a really sharp spike down with FTT, and it's just nothing unlike what is happening with all the other cryptos. Let's look into Rose. A couple of community members reached out and said, Ken, can you have a look at Rose? I love doing things for the community. I'm always happy to help out. What we saw was various price action that had occurred with Rose in the past. Very big sharp sells, or sharp increases in price, followed by a lot of coming up the wall, going down the stairs, coming up the wall, going down the stairs. When we started to look at Rose, I said, oh, this looks like a going up the wall. I wouldn't be surprised if it comes down the stairs. Now let's have a look at how that actually played out. It definitely started coming down the stairs, and I wasn't involved in Rose, but I thought, well, why not? This looks like a really interesting project. So I started to place layer buy orders at levels of support below, and you can see there's a lot of levels here. Now what happens when I'm layering in? Does that mean I expect this to be profitable straight away? No, it doesn't, because if you're doing it correctly, you're making paper losses, but that's actually booking in a percentage that will increase later. And what do we see Rose doing? Oh, came down, nearly activated this lower level, but all of these ones that I put into the market have now been filled. Could it go down lower? Absolutely it could. And this is the thing with crypto. Crypto is really, really volatile. There is no certainty, but there is certainty that many people were witnessing Rose coming up and were saying, I've got to get in. Look at this thing. It's just pumping and pumping and pumping. I have to get in. And then what happens? 60 cents, and then it falls down. And if we look at that, that's quite a nasty fall. So I just like to be accurate as possible. So from this 60 cent level down to, say, the current price, 49.07%. That means if you put $10,000 in, you would have lost $4,907. This is what you don't want to do. You want to just layer in at support levels and spread your buys across many areas. I see people doing a lot of very strange things on YouTube and inside social media. They put a whole whack of money on one level, and I just say, wow, you're costing yourself so much money. With probabilistic fearlessness and just trading the chart in front of us, we say Rose looks pretty good. It's got a lot of positive momentum and it's a powerful particular crypto. And Masterclass students, you'll know why. When we look at Rose, we just say, okay, it could come down. Could it lose support? Yes, it could. Could it halve in value from here? Yes, it could. And what do we say about that? So what? What we do when we're professional, we just detach. We're kind of like, I guess, monks. We just basically walk away and we say, we know that in time this volatility will move again in our favor. That's why you must have patience. Often people can't have patience because they haven't bought the thing that they're looking at. Rule 14, until an expert buy at spot, I would suggest you just buy at spot anyway. Crypto has volatility unlike the world has ever seen. And when you buy at spot, you're already geared up, but spot means that you can hold it. When you buy a derivative, it means that you don't own anything. You've actually borrowed money. And that means that you've got fees on fees on fees, and you can get liquidated as well. Over the past 24 hours, we've had 665.25 million in liquidations across 238,828 positions. Over the past 24 hours, 70.51% of those liquidations were long liquidations. If you buy at spot, you can never ever be in this list. You don't want to be in this list. Another really important thing here, this trade at the moment is underwater. It's sitting at a loss. Does that mean we should get rid of it? Because it's red, we should sell, right? No. We actually are leaning into this trade with the expectation things are going to turn around. Each time you put in a layer at support, you're picking up extra crypto at an average lower buy rate. That's actually what you always want to do. Price is always moving in a wave, and if you understand this, you're halfway there. Please remember, price always moves in a wave. It goes up and down and up and down. It doesn't just go down. And if we get some black swan that forces the price way down, actually that is the best time on earth to get in. Not the worst, the best. There are just some fantastic projects out there that have been really difficult to get into. Have a look at it, EGLD. I'll just do the percentage on this particular one. I think it could be really interesting for you to see. If we just get up here, whoops, just missed it by a bit. I think you get the idea. This is about 75%. I'll just try and get up there. Oh, not getting into it. There we go. Pesky mouse. Okay, this is a 77.17% reduction. It's even a little bit more than that, but it just gives you an idea of the inherent volatility inside crypto. Is this unusual? No, it's totally usual. This is what crypto does, but it's the positive things that people tend to remember. They don't tend to remember the pullbacks, but this is what professionals focus on. If you're focused on the pullback, you're minimizing your risk. That is a really good way to think. We can see ICP has lost its support. Sand, what an incredible project to get into. It rallied so heavily up. It's come down quite substantially, and this is an unsustainable spike down. Does it mean it can't go down further? Of course it can go down further, absolutely. And if it does, that just improves your average buy-in price. What you always want to do is to seek to lower your average buy price. Even if the crypto is going up, you don't want to buy high. You want to try and take it when it's coming back to support levels. That is also lowering your relative average buy price. We can see Filecoin not doing too well. Poor old Filecoin. CHR has had a really substantial reduction, but this is all in line with what Bitcoin's gravity does. Bitcoin's gravity will pull the entire crypto market with it, and that's why I go through so many different alts so you can see it. Look at Near. Near was just a superstar, but it hit resistance, and then we saw Near getting pulled down with Bitcoin's gravity. No alt can escape Bitcoin's gravity. Looking at some community favorites, we see VRA is still under resistance and selling off in accordance with Bitcoin's gravity. We can see Icon is doing the same thing, it's selling off. Sushi is also selling off, as is IOTA. LRC has been hit particularly hard, and it's really interesting. We were doing some leaning in here, expecting a bit of a technical bounce. Price has come down further, but this lowering of the average buy price is just an open invitation to get more layers in. And this is probably the opposite way towards what a lot of retail investors think. But these particular downward spikes are very unmaintainable. They're the inverse cousins of these very big upward spikes. They go in both directions. If it drops off the cliff, it'll come back the stairs. And if it goes up the wall, it will go back the stairs. That's just something to keep in mind. We expect big bounces in this, but not necessarily tomorrow, or maybe even the next day. It could take a little while, but we understand the nature. When you get a black swan, that's the absolute perfect time to layer in. And does that mean if we're bought higher up, we feel really bad? Absolutely not. We just go with the probability. There was the probability that things would gather a particular technical bounce around here, but the market turned against us. What does that mean? Well, we just say, okay, the market turned against us, so what? We've actually bought quite well, and LRC is quite a strong project as well. RSR is on the way down, and so too is audio. Cartesia is on the way down, but starting to put in a little bit of a bounce. What does it all mean for the crypto market? We can see Bitcoin has found a level of support at that 34,178 mark and bounced. There's also a level of diagonal support coming through here. We have buyers stepping into the market at the moment. What happens on Monday when the US markets open is probably the more critical thing. Will we come down further? We just have to wait and see. But I'd just like to inform you that this particular sell-off has been a rather nasty technical violation. We did expect that it could come down to 37,406, but we didn't expect that it would come down so fast. I believe it's probably the Russia in combination with the Fed rate hikes. But over time, interest rate hikes decorrelate from stock market progression. A lot of people think that there's a very simple relationship. There are no simple relationships in finance. For example, interest rate hikes do not mean that the stock market is coming down. And I know many people will say that they do because they've heard someone say it, so it must be right. But the empirical evidence over decades and decades does not substantiate that. One thing that I have seen inside the crypto market, we've had an absolute absence of shorts, and shorts are the fuel to actually fuel higher prices, just like the longs are the fuel to fuel lower prices. When longs get liquidated, this is exactly what we see: downward price momentum. When shorts get liquidated, we see exactly the opposite. We see prices coming up. And there will come a time when there are simply too many shorts in the market and they'll get liquidated, forcing price up exponentially. Please always remember, crypto is an exponential market. It's not like the stock market. It's not like Forex. It's got its own rules. Over 6 weeks ago, we did say that the potential for Bitcoin to come down and test this lower area was always there. We said it in episode 358 on December the 5th. So we've understood that there could be negative price momentum inside the crypto market because we've seen similar patterns play out across the past. So we were prepared for that. But this particular sell-off has been really, really nasty. It's potentially that the longs have got spooked beyond all measure and basically said, okay, I'm just selling. That actually makes a lot of sense because the market has been coming down for 74 days. That's a very long period of time, and a lot of people will be losing hope because of this. But as professionals, we look at this and say, what goes down must come back up. And you can have a flush out, a capitulation kind of event like this. These are the best times to get in. We may get more follow through. For example, the stock market on Monday may sell down. No matter what happens, please just make your in advance probabilistic choices on what you will do. If the market goes down, what will you do? If it rebounds, what will you do? If it just flattens out and consolidates, what will you do? This is just more than a thought exercise. It's a definite plan of attack, and you need to have that as a professional. In the comments section, it would be really good to discuss how people have come out of the panic zone and blame zone into zone 3, or if you're still in zones 1 and 2, what you think you can do to get into zone 3. This is a really, really important thing. To abandon certainty is to abandon terror. Certainty creates terror. Just get away from it as quickly as you possibly can. Embrace all the volatility inside the market by having your 10-5-10 fund and looking towards probability and rules, and especially stacking probabilities. I would really love to know and hear your comments. I think this is a really, really important thing to share with other people, and I'll read through them tomorrow on the channel. I hope you found the content useful. Please consider sharing and liking this video if you think it will help others. Thank you very much to our moderators for keeping our community safe from scammers. If you would like daily updates on price movements in the crypto market 7 days a week, 365 days a year, please subscribe to YouTube. I've left helpful links in the description of this video. Please remember, crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there, my friends. Take care and see you next time. Bye for now.